Have you ever pondered the consequences if a US Treasury auction failed? Essentially, meaning the US government couldn't secure enough lenders to borrow the money it needs? Sounds confusing, right? But don't worry, I'm here to explain it. Many might dismiss this scenario as improbable, given the existence of the Federal Reserve, which can simply print money. However, recent data from Treasury auctions suggests we might be edging closer to such a reality. Sounds interesting, right? So don't forget to subscribe. Well, in October 2023, a 30-year Treasury auction experienced a 3.7 basis point tail, with dealers left holding 18% of the issued bonds. Just a month later, in November 2023, the situation worsened with a tail of 5.3 basis points and dealers holding 24.7% of the issue. It's not confined to 30-year auctions. In January of the following year, a 5-year note auction showed signs of trouble with a 2 basis point tail and a bid-to-cover ratio of 2.3. Even more concerning, in February 2024, the 20-year US Treasury had a 3.3 basis point tail, its largest on record, with dealers holding 21% of the auction, and foreign bidders dropping to 60% from November's level of 74%. Sounds interesting, right? So don't forget to subscribe. These statistics may seem like jargon, but they signify potential problems for US Treasury auctions. To understand why, let's delve into how these auctions work. When the U.S. government needs to borrow money, it does so through the Treasury Department by issuing bonds, commonly referred to as Treasury bonds or treasuries. This borrowing process involves holding an auction. During an auction, the Treasury Department announces the amount it wants to borrow and the interest rate it's willing to pay. Individuals and institutions can participate in these auctions. Individuals can choose to lend money at the specified rate or decline to participate. Institutions, however, have a third option. They can lend at the specified rate, decline to participate, or offer to lend at a higher rate. Just like any borrower, the U.S. government aims to secure loans at the lowest possible interest rate. Given its substantial borrowing needs, it typically exhausts all lenders willing to lend at the specified rate before considering those offering higher rates. If, after fulfilling the initial borrowing requirement, the government still needs funds, it will borrow from institutions offering higher rates, starting from the lowest rate and working upward until it meets its borrowing needs. Importantly, all participants in the auction ultimately receive the same interest rate, which is determined by the highest rate accepted to fulfill the borrowing requirement. This rate is known as the high yield. The difference between the desired borrowing rate and the high yield is called the tail. A zero tail indicates that the government borrows the desired amount at the specified rate, while a larger tail suggests difficulties in borrowing at the desired rate. A significant tail in Treasury auctions can indicate several issues within the financial system. Firstly, it may signal weak demand, suggesting that lenders are hesitant to lend money to the U.S. government for various reasons. Secondly, it could reflect a lack of confidence in the government's fiscal situation, leading lenders to demand higher interest rates to compensate for perceived risks. Thirdly, it might indicate a liquidity shortage in the financial system, where potential lenders lack the necessary funds to participate in the auction. Lastly, a large tail could suggest a decline in the number of available lenders, particularly if foreign lenders reduce their participation. The prevalence of larger tails in recent auctions raises concerns about the underlying factors driving this trend. 3 key questions emerge. Why are we seeing larger tails? Will the situation worsen? And what would happen if a Treasury auction failed? Understanding the reasons behind increasing tail sizes is crucial for assessing the stability of the financial system. Moreover, determining whether the situation is deteriorating or if it's a temporary phenomenon is essential for policymakers and market participants to devise appropriate responses. Finally, contemplating the potential consequences of a failed Treasury auction is vital for understanding the systemic risks associated with such an event. For more, please subscribe to our channel.